The number one thing that's keeping landlords stuck at one to two properties isn't finding another deal. It's figuring out how to finance the deal. I talk to investors all the time, and they're so concerned about their debt to income. This is the amount of money you make versus how much you can actually qualify to get a new loan. Everyone thinks their debt to income is the ceiling, and it's not. I'm going to show you exactly how to get around it, what your lender actually needs to see, and what financing options that most landlords don't even know about exist. Are you a landlord and you own one or two properties and you've seen some of the benefits of investing in real estate and you want to buy more properties, but you can't figure out how to buy more without draining your savings? Or maybe you own a couple of properties and you're constantly thinking about what systems do I need to have? Am I missing something? Is there something I should be doing differently? How do I get more of my time back so this actually helps me instead of taking from me? If you can relate to that, I've absolutely been there. My name is Erica Brown. I've been investing in real estate over 10 years. I run a portfolio worth over 5 million. I invest in short-term, mid-term, long-term, multifamily plus, and I help equip other landlords to learn how to create systems, learn how to buy more properties and scale without draining your energy, your time, or your pockets. Okay. And I'm hosting a webinar, the biggest roadblocks that landlords miss and how to overcome them, coming up. And I want you to be there. It's absolutely free. I'm going to be breaking down the reasons why landlords are stuck at one or two properties and exactly what you need to do in order to find your next deal. All right. So go to the link below, join me. It's absolutely free, and I will meet you there. I wish I had learned about this type of loan when I first started investing because it could have been absolutely a game changer. Okay, let's get into it. By the way, this episode is brought to you by Baselane. I'm going to talk more about that later. I'm Erica Brown, host of Wealth Within Reach, and I help landlords scale to real estate to help them get their time back and make more money. So if you've been watching or you're listening and you haven't subscribed yet, go ahead and subscribe so that you don't miss any of the juiciness that I have coming up for you. Here's what most landlords don't realize. Your W-2 income is not the only way to qualify for your next investment property. There are loans out there made specifically for real estate investors that allow the rental income that you're making on your property to cover 75% of the monthly loan payment so that you don't have to qualify from an income standpoint to be able to get a loan for multiple properties. I'm going to talk about the difference between conventional loans and what we call DSCR loans. These different types of loans is what really changes everything for you. I'm going to talk about how your tax returns can either hurt you or help you, and how to proactively plan and what to do before you even apply. So if you're out there and you're listening and you already own a couple rental properties, you make six figures and you feel like your debt to income is maxed out, maybe you have a lot of student loans and you want to buy more properties because you're nervous if you can qualify, then this episode is absolutely for you. What's crazy is you think you should be having a conversation with your lender, but you really need to be having a conversation with your CPA. Let's talk about one of the most missed loans that landlords sleep on that they have no idea about that can really unlock your opportunity to qualify for your next deal so much easier than your first couple properties. It is called DSCR loan, DSCR. Debt service coverage ratio. These types of loans are not based off of your personal income. These loans are based off of the asset. It's called asset-based lending. So depending on the amount of rental income and cash flow that the property will help to determine if you qualify for the loan. As long as you have at least a 680 credit score from a personal standpoint, that is all they're concerned. They're not looking at your tax returns. They're not looking at your W-2 income paycheck. They're not looking at your student loans or your debt. They're looking at the property that you're purchasing. If you were to rent it out, does it cash flow? That's what they're looking at. DSCR loans are perfect for people who don't receive traditional income. Maybe you're self-employed, or maybe you already have a lot of properties on your conventional side and your DTI now is maxed out and you want to continue to scale in real estate, but you don't want to have to go through all the paperwork that you're going to have to go through on the conventional side. The key with these types of loans is that they are non-owner occupied loans. You cannot live in the property. It has to be an investment property in order for you to qualify. Okay, now let's get practical. Let's talk about what the banks will need in order to qualify for this type of loan. If you're serious about scaling your properties in 2026, the question you should be asking is not what property should I buy? It's do I actually have the systems in place to manage what I currently have? I've been running a $5 million real estate portfolio for years now. And the single biggest thing that has allowed me to run my portfolio without chaos, without the missed deductions, without the messy books, and without the tax panic, I'm going to pull back the curtain and show you the exact tools I use to run my business and grow my business. And I'm starting with the first tool that is the financial backbone of my real estate business. Now, before I get into this portion of today's video is sponsored by Baselane, but I want to be really clear. Only recommend tools that I actually use. I use this because it solves real problems that I have in my business, so let's get into it. Let me take you back when I had a handful of properties and I was doing the same things that most of you guys are doing. I was commingling my personal expenses and my business expenses. I wasn't tracking anything, and every now and then I updated the spreadsheet whenever I got around to it. And then when it came around the tax season, it was a total mess. And I found myself year after year constantly apologizing to my accountant. Can you relate to that? I was moving money between personal and business expenses, and then when it came down to catch up, I had no idea what was which. I had no real picture of how my properties were actually performing, and everything was stuck in my head. I knew that I need to fix this if I wanted to scale, and now I know that you cannot run a $5 million portfolio the same way you run 1 to 2 properties. That's when I found Baselane, and it genuinely changed how I operate completely. Baselane is an integrated banking and bookkeeping platform made by real estate investors for real estate investors. It's not a general business tool that works kind of for landlords. It's actually made for us. And what it does is it brings everything together in one place between your banking, your bookkeeping, your property management, your rent collection, your reporting, all under one roof. And the beautiful thing is it organizes everything broken down property by property. Here's exactly how I use it. Number one, I use it for property specific banking. Have you heard the people wanting to get a bank account per property? With just traditional banking, that can be a full out nightmare. But with Baselane, because it's so easy to set up a bank account and have everything separated under one roof, it makes it much easier if that's how you want to manage your properties. AI powered bookkeeping. This is one of my favorite parts about Baselane because it uses AI to categorize your transactions automatically. And it's not just by general category, it's by specific tax categories based on your transactions. It uses real estate systems chart of accounts that's already built into the platform. My books pretty much are essentially done, and my accountant loves me for it. I also love the rent collection and the money management piece. I love that it has automated rent collection and reminders, so I'm not constantly having to check in and tell my people to pay on time. When it comes time to file my taxes, Baselane has all of my transactions tagged, receipts attached, and everything is just organized in one place. It saves me countless hours. All I have to do is go in, generate my report, download it, and send it off to my team. If you're ready to get your rental finances in order and you're trying to get off of that manual spreadsheet that you're not updating anyways, and you really want to be able to have an all-in platform that does everything for you, then you need to download Baselane. And the beautiful thing is when you sign up, you get $100 cash bonus. So let's get your business running like it should. So if you want to join me plus 50,000 other real estate investors who are using Baselane, you could just actually go to the link below and sign up. When you go to try to get a DSCR loan, the lender is going to want to, one, they're going to wonder, are you already under contract? Do you already have the property? One, they're not trying to waste their time trying to talk to you about like shopping for a next deal. They really would love for you to have a contract in mind or to already at least have a specific buy box, like a search criteria where you know exactly where you're going to be buying, what the purchase price is going to be, so they can issue you something that you can use for proof of funds so that you can begin shopping for a property. Once you get that contract, they're going to want to know what is the property projected to be worth. They're going to want to know your numbers. Here's what your lenders are looking for when you go to qualify for a DSCR loan. They're looking at, do you have at least a 680 credit score? Does the property cash flow after you pay your mortgage and expenses and all that kind of stuff? Does the property cash flow? And they're looking at, do you have some type of reserve that you can put aside for the property? And that is per lender. Different lenders have different requirements, but ultimately, that's what they're going to be looking for when you go to get a DSCR loan. They're also going to be looking for, if you have other rental properties, they may ask you for your profit and loss statements or your rent rolls from your other properties. Versus if you go to get a conventional loan, they're looking for 2 years worth of tax returns. They're looking for, they may ask up to a year's worth of your bank statement. They are looking for you to have, 680 to 700 minimum credit score. They're looking for you to have 6 months of reserves. They want you to have profit and loss statement from your current properties and so much more. The most beautiful thing that clients say about DSCR loans is that they are so much easier to qualify. They need significantly less paperwork and they close much easier than investor conventional loans. Here are some of the differences between your traditional conventional investor loans and DSCR. The DSCR loans, they still have 30-year fixed rate mortgage loans. The interest rates are generally slightly higher than they are on the conventional side, just a little bit. But one of the biggest changes and differences is that they generally come with a prepayment penalty for the first 5 years. So if you were to refinance out the mortgage or sell the property, then you may have to pay a small penalty if you do that within the first 5 years of the loan. When I'm working with clients, one of the things that I will do, or I help them do, is I help them leverage a HELOC on their primary home so that when it comes to using their down payment, they don't have to pull from their savings in order to use as a down payment to buy their property. You can get a DSCR loan. You generally have to put between 20 to 25% down. You can use your HELOC to pool to cover the down payment, use the DSCR loan, close on the next investment property, ensure that not only does the cash flow cover both your first mortgage with the DSCR, but also cover the HELOC, and then you're able to rinse and repeat. If you've been stuck at just a couple of properties and you're trying to figure out ways in order to buy more properties, consider a DSCR loan. This could be an option for you. I have people hit me up all the time and ask me for DSCR lender recommendations. I always tell them I share all of my vendors with my clients. That is a beauty part of working with me as a client, having me as a mentor, is that I have a group of vetted agents and attorneys and lenders and all sorts of people that I have vetted for you that I refer to my clients. So if you're interested in working with me, you can actually go to the link below and schedule a call to see if we're a good fit. And I would love to send you my people from there. All right. If you haven't already subscribed to this episode, be sure to subscribe now. I'm always sharing juicy information. I have lots of good episodes coming up for you. And so thank you so much for listening. Thank you for watching. Thank you for sharing. I'm so grateful that you're here and I will see you next time. Bye.